Hi, and welcome to this week's Stockscores Market Minutes. I'm traveling this week, so I don't have my camera with me, so we're just going to do visuals on the screen. This week, I want to talk about the charts of Tesla, Nvidia, and Apple, give you my predictions for where they're likely to go, but also teach you how to read a stock chart. I'll also look at the trade of the week, a very hot stock, BMNR. I'll show you some of the signals that we got through the week for when to buy it. All right, but let's get into our topic of the week, which is the charts of Tesla, Nvidia, and Apple and how to read these charts. Now, if you understand 6 simple concepts, you can assess any stock's chart in less than 10 seconds. I'm going to show you with these 3 stocks, and then I'll also revisit these concepts at the end of the video when we look at the trade of the week. The 6 concepts are optimism and pessimism, support and resistance, price volatility, and abnormal activity. So now we're going to jump into my website, stockscores.com, and we'll look at the charts of Tesla, Nvidia, and Apple, and we'll look at them on multiple time frames because where a stock is likely to go really depends on the time frame you're looking at. You're going to get a very different message if you're trying to predict what the next week is going to do versus the next year. So let's jump over to the Stockscores website, stockscores.com. You can register for my free weekly newsletter right here. I provide stock picks, different concepts around trading. But we're just going to enter the symbols of these stocks up here in the upper left. Tesla, TSLA, click on enter. And there we have a 240-day daily chart. Now you can change the chart time frames using these links at the top of the chart. But I want to begin by just describing these 6 concepts. So when you have falling tops on the chart, that is pessimism. So we had a downtrend there. That was a period of pessimism beginning in mid-December and lasting until mid-April. That cycle of falling tops was broken right there the 3rd week of April. That was a decent buy signal, not super good because there wasn't yet rising bottoms. Now we like to see rising bottoms, which is a sign of optimism. So this bottom here is higher than this bottom here, which means you've switched to optimism. And then we have a break up from optimism right there, which sets up for a short-term trade where the stock moved from about $285 a share up to $360 a share in 2 or 3 weeks. So that would be a nice little swing trade. Well, where is the stock now? We still have rising bottoms if we draw a line like this, but we also have falling tops. And so this is becoming sort of a neutral chart, slightly optimistic, because I would say the bottoms rising are more predominant than the tops falling. So on the daily time frame, neutral to slightly optimistic for Tesla. If I go to a 3-year chart, we can see that we had this cycle of falling tops here, broke it there, started to build rising bottoms, and that led to this very strong run to the upside. Now we've had falling tops, and we are basically at the trend line. Now here's another important concept. I can draw a trend line across these tops, this one and this one. And when the price runs down and away from that trend line, the stock becomes oversold. By that I mean the sellers have acted too much on fear, pushed the stock down too quickly, which leads to a rebound up to the trend line. And that's what really we've seen in Tesla. It's still a stock in a 3-year downward trend on the 3-year chart. What happened was the stock was oversold. It bounced back from being oversold, got back to the trend line that was set off by those 2 tops, and now we're trending along that downward trend line. For this stock to really become favorable, we need to break up through the trend line, and then the stock should go up towards those highs, the 440 to 460 range. That hasn't happened yet, so I still think we are more or less neutral on this chart. Now, if you want to look at the very short-term time frame, I can click on the 1M here, which is a 1-month chart. And this is a 60-minute or 120-minute. I can change it to a 60-minute by clicking on 60M. And now we can see that there was falling tops, and the falling tops were broken right here, which led to this rally. And now we've switched from rising bottoms to falling tops here again. And so the short-term chart is somewhat bearish, very short-term. It is starting to get better, and we could see this resolve with a break up through 320, which would also be a break on that longer term time frame. So you can see that the message is very different depending on the chart you're looking at. But I would say Tesla right now is more or less neutral, slightly bullish if we can break that 3-year downward trend line. Let's try Nvidia. Now Nvidia's had a very nice run. You can see here falling tops, gave way to a rising bottom and a break up from a rising bottom the first week of May. And that's led to a move from $115 to $160. The bottoms are rising, the trend is intact. We managed to break through this ceiling price, which has held up for quite some time, so that's a positive. But we broke through the ceiling from volatility. Now what I mean by that is this stock has been quite volatile because it is trending upward. When you get breakouts from volatility, you often get a pullback before you resume the upward trend. So I like Nvidia, but I would rather buy it on weakness than chase it here on strength. So what I would look to do on Nvidia is plot your trend line, something like this. If we pull back to the trend line and bounce off of it, great. If we make a more substantial pullback, then wait for the build of a rising bottom, which is optimism, for that next leg up. I think the stock is risky here. If you're in the stock, it's a good hold, but the sentiment stock score is 87. That seems like it would be good, but when they get too high, you're really getting overbought, and that means likely to have a pullback. I like stocks when they just start to cross above the 60 point, which is right when Nvidia broke the downward trend line. You see the stock scores started to move up, and that's the best time to be a buyer. Right now, the stock is a hold. I wouldn't sell it, but I wouldn't chase it here either. All right, last, let's look at Apple. Apple has had falling tops, and we're now breaking that downward trend line and starting to build rising bottoms. So Apple has made a positive move this past week because it's broken the downward trend line and now starting to build rising bottoms. Let's take a look at the 3-year chart of Apple to get that longer term sense. And here is one little issue. If I draw the trend line starting at the high and letting it fall to that price peak right here, you can see that much like Tesla, we were oversold and we're coming back up to the trend line. The stock is likely to get stuck there. When we look at the daily chart, it looked pretty good. But when I look at the 3-year weekly chart, I think, yeah, it's running into this resistance and it'll probably get stuck there at 228. So if you're in Apple, I think you hold it. If you're thinking about buying it, I would take maybe a quarter position, wait for it to come up to the trend line, pull back, and then break the trend line. And that's when you can start to take more of a position for the move up to this resistance level. Now, keep in mind, I am doing this for educational purposes. You have to do your own due diligence. I'm just giving you a sense of how to read charts. All right, so let's get into the analysis of the overall markets that I do every week, starting with the S&P 500. You should now know what to look for. This is a chart that is bullish because the bottoms are rising. It broke through resistance, much like Nvidia. It is due for a pullback. I wouldn't chase the market here, but on weakness, like when these get these little pullbacks here in the upward trend, those are great buying opportunities. So buy it on a pullback break as long as the upward trend line isn't broken. How about the NASDAQ 100? QQQ is the symbol. Similar situation, rose up to resistance at these highs, broke out 6 or 7 days ago, looks good to go higher. I think the NASDAQ looks better than the S&P because it built a little foundation here before it started to move up. Let's take a look at the 3-year weekly chart, and you can see that we have broken through resistance. I think if we get pullbacks, buy the breaks of pullbacks. Don't chase the strength. Wait for the pullback, buy the break of the pullback, as long as the bottom rising is still intact. Let's take a look at the small cap market, IWM. You can see here, tops are falling, so the sellers were in control. That's a pessimistic chart. But the bottom started to rise here, and then we broke up from a rising bottom early in the month of June, and now this market is starting to gather momentum. We're seeing this in trading. I am seeing better performance in the small cap stocks where they were really lagging for some time. We're going to run into a little resistance here and then here at the all-time highs, but I think this market looks pretty good. Let's turn our attention to the Canadian market now, T.XIU. Breaking to new highs, bottoms are rising, buyers are in control. Look at the 3-year chart. It's a good chart for a hold. Chasing here, a little risky. I think individual stocks can be good if they're breaking from a pattern of low volatility. What do I mean by low volatility? Well, when a chart is going sideways like this, that's low volatility. When you break from low volatility, you usually start an upward trend. So for me to want to be a real buyer of any market, I want to see it go sideways for a while and then break from that sideways trading. That's not happening yet. Next chart. Let's take a look at the chart of gold. And we have rising bottoms. Buyers are in control, but we've got pretty strong resistance here. If we can break through this, great. However, when I look at the 3-year chart, what I see is that the chart has gone somewhat parabolic. If I was to draw a linear trend line like this, we're way above it. So that means the market on gold is risky. No real strong reason to sell, but chasing here is risky. Let's move our attention to oil. USO is the chart, and you can see lots of volatility. We don't have quiet sideways trading. We're up, we're down, we're up, we're down. That tells us that investors are uncertain about oil. And there's really no strong trend here. So I think as oil is hard to predict, if we look at the 3-year weekly chart, we can see that oil has just been in this long, sideways, choppy pattern. When it gets to the top, you sell. When it gets to the lows, you buy. But in the middle here, a little bit hard to predict. All right, let's move into currencies. UUP is the US dollar. You see the downward trend is in place. US dollar is bearish. Doesn't matter what time frame you look at. 3-year long-term time frame, bearish. 1-month time frame, bearish. So the US dollar is not looking good. If we go to GBTC, which is our Bitcoin chart, you will see that it is generally rising bottoms, but under resistance, compressing with low volatility. If it can break out through that, that's good. But one thing to keep in mind is that Bitcoin is priced in US dollars. So even though this is hanging up, or hanging up well, if you're a global investor who's bought this, the US dollar has fallen, so you're actually getting underperformance on this asset. Do I think it's likely to go higher? Well, the trend is up. 3-year weekly chart is strong. I think it's still a hold. But if this cycle of rising bottoms is broken and we break down through it, then you want to start to take some profit on Bitcoin. Finally, let's take a look at TLT, which is our bond market chart. And here we have tops falling, bearishness there, generally sideways going back a few months. If we look at the 3-year weekly chart, we have bearishness, but at support, so it's somewhat neutral in the short term. It needs to break this cycle of falling tops. All right, so that's our breakdown of the markets. Let's just take a look at my summary here. US large cap stocks bullish, NASDAQ bullish, US small caps bullish, Canadian stocks bullish. Everything's looking good, but it is getting a little bit extended. Gold neutral on both time frames, oil neutral on both time frames, US dollar bearish, Bitcoin neutral, long-term bullish, and bonds neutral. All right, now let's get into the trade of the week, and it is on BMNR. We're going to review some of the concepts from earlier in the video. So let's take a look at the initial move here. This stock very hot this past week. It all starts right there. See that pink and yellow dot? That's my own indicator. It's called an action candle indicator. You can learn more about it at stockscores.com. It's part of my active trader courses and indicators that I've created for my members of Stockscores. What it does is it looks for statistically significant abnormal volume and abnormal price action. Now on BMNR, it actually did it earlier in the day in the pre-market. So this actually started way down here at around, I think it was around $5. That's when the stock started to behave abnormally. So we love that. Now, if you missed this, that's okay. There's more opportunities. Here we have rising bottoms, which is optimism. We have low volatility, compression of volatility, And then we have a breakout from low volatility, which starts this move right here. Then we are in this cycle of falling tops. By the way, this move here to here was pretty substantial, $25 to $75. So that's a 300% move. Then we go into this sideways downward trend. We break it right here with another action candle right there at the open on the 3rd of July. And that led to the next big move from just over $60 to $160. Now, would I buy this now? Here's my trend line. I'm way extended above it. I think that we are likely to pull back because the market is overbought. So that's the breakdown on BMNR. I hope you've enjoyed this week's Stockscores Market Minutes. If so, click on the like button, subscribe to the channel, and as always, trade well.